Hello investors. The month of March is not even over, and across many cities, the temperature has already crossed 40 degrees Celsius. Many reports are coming, and you might also be hearing the news that 2026 is going to be an El Nino year. So this year, the temperatures are expected to be intense. The summers are expected to be intense. Now, the condition of the market is quite weak due to the ongoing Iran, Israel, and US war. But if we keep that aside for a minute and ask us, can 2026 turn out to be a good year for AC sector and AC stocks in India? Because you might remember that 2 years ago, there was an extreme heat wave and AC related stocks did well then. So today we will discuss this and we will also talk about which businesses you should track in the AC space. So without any delay, let's get started quickly. First of all, let us understand the sector landscape and please listen to me very carefully, otherwise you will miss important points. So in this segment, two types of listed companies are there. One is brands or B2C players such as Voltas, Blue Star, Whirlpool and LG Electronics, whose products you see being sold in the market. These brands have their own manufacturing and they also outsource manufacturing on contract basis. The companies to which they outsource manufacturing are called OEMs or EMS players. PG Electroplast, Amber Enterprises and EPack Durable are three major contract manufacturers. But the problem with B2C or branded players is that there are so many brands in the market that competition is very high. In such an environment, when we are seeing raw material prices are increasing sharply, like we have seen in the last year, aluminium and copper prices rising sharply. So B2C players cannot easily increase the prices of their products due to high competition. This creates margin pressure. Therefore, today we will talk more about B2B players. This is because this is a sector where B2B players tend to have comparatively more stable margins or better growth. Contract manufacturers operate on per unit margins. Additionally, due to PLI schemes and government support, manufacturing is shifting from China to India and brands are sourcing ACs from Indian manufacturers instead of China. So because of this, if a season is good, their numbers also turn out to be quite strong or well. However, currently contract manufacturers, meaning your B2B players, are also facing several difficulties. And the main reason behind these problems is that 2025 turned out to be a very bad year for the sector, entire sector. You might remember that in 2024, there was an intense heat wave. So AC sales were very strong. At that time, every player from PG Electroplast, Amber and other AC stocks performed very well. Companies were expecting that 2025 season to be similar to 2024, but monsoons arrived early last year. You would remember. The summer season was shorter and monsoon lasted longer. The climate was not as intense and because of this, AC demand last year was not strong. In fact, the sector degrew about 25%. So not only there was no growth, but another issue occurred. Since many players were expecting a good season, they had stocked up a lot of inventory. And this was done to avoid the situation that happened in 2024 when there was a shortage of ACs and components due to high demand. But since the season turned out to be so weak, a large amount of inventory remained on their balance sheets and these problems from last year are continuing into this year as well. This is not just with the brands and manufacturers that have inventory piled up. Even dealers and retailers also have a large amount of AC inventory. Currently, about 40 to 45 lakh AC units remain unsold in the sector. Additionally, what has happened is that BEE norms for energy efficiency were recently changed. Because of this, pre-buying by dealers has also happened. The logic behind BEE norms purchase is that ACs manufactured under the new norms will be expensive. And as everyone knew, that AC prices would increase and at the same time, copper prices were also increasing. So even though dealers already had a large amount of inventory, they purchased even more AC units. So they stocked up earlier so that they can now sell those ACs to customers at cheaper prices. The timeline for these BEE norms is that ACs could be manufactured under the old norms until December 31st and their sale is allowed until 30th June. Because of this, you will see that many AC stocks also reported strong Q3 or December quarter results because there was pre-buying. Brands and manufacturers were able to liquidate their inventory. However, the downside here is that inventory at the dealer level has increased even further. This creates a risk that when season actually starts or arrives, dealers may or may not place new orders with AC companies. As I told you, currently about 40 to 45 lakh units remain unsold in the trade channel. And although the management of most companies says that these AC units should get sold by Q4, we will have to see what the inventory levels look like once March ends. Because until this inventory is sold, companies will not receive new orders from dealers. Another problem is that because of the prices of copper and aluminium have increased so much, the manufacturing cost and subsequently the price of ACs has also risen, and that is also a concern. We will have to see how much demand gets affected because of the price hike. Although, as you remember, the government had reduced GST on ACs from 28% to 18%, but several other factors countered simultaneously. BE non-stayed, commodity price inflation happened, e-waste rules were introduced. As a result, overall AC prices will increase again by around 12 to 14%. Therefore, the benefit expected from the GST rate cut has been offset by these reasons. So, by default, AC pricing has returned to where it was last year. Now, a humble request, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Now coming back to our discussion, these are the issues and risks currently present in the sector. That is why AC stocks do not appear as attractive as they did 2 years ago. However, management commentary of most companies is positive for this season. They say that by the end of March, all inventory will be liquidated, after which fresh orders will begin to come in. Therefore, the upcoming summer season, April, May and June, can bring good growth and the sector can record 15 to 20% growth compared to FY25. We are not comparing with FY26 because the sector degrew during FY26. But I believe as investors, we cannot accept this point or opinion at face value because as we are seeing, there are several issues affecting the sector. We are seeing them in front of us. We will get more clarity after the March quarter results come and when con calls happen. Because personally, I believe that this management commentary is also outdated now and not much relevant. Because see, since then, the geopolitical environment has also changed due to the war. We are also seeing uncertainty around LPG shortages. Attacks on oil and gas facilities of Iran, Qatar and Saudi Arabia have escalated. In such an environment and during war-like conditions, it is very possible that consumers may delay their luxury or discretionary spending. Consumers might think that, hey, this expense can be avoided for now, especially if war escalates further. So that is also a risk. Therefore, I will stress again that once Q4 ends and then we will have clarity when March quarter results come and management commentary comes, we will have clarity on how much inventory is still available or lying in the sector and how many fresh orders the likes of PG Electroplast or Amber can expect for this summer season. Plus last week, PG Electroplast also released a press release stating that due to restrictions placed on gas supply, the company will also be affected. The EMS sector uses natural gas and if supply does not normalize or they are not able to manage any other source, the production limitations may arise even if season remains strong. But this does not mean that you cannot play this cycle at all because of these issues. You can explore proxy businesses. For example, I am personally expecting good results for Aditya Vision. And yes, as a very strict standard disclaimer, I am invested in Aditya Vision. Anything I say should not be taken as a buy or sell call. I am telling you this strictly for informational purposes. So Aditya Vision is an electronics retailer similar to Reliance Digital and Tata Croma, and it has about 190 stores across Jharkhand, Bihar and Uttar Pradesh. During the 2024 heat wave, Aditya Vision's total sales grew by 39% year on year. in Q1, and AC sales, you will read here, grew by 56%, mind you, year on year. So personally, I feel that AVL's case looks much stronger than EMS players. The temperature is definitely going to increase. Summers will be intense. As for EMS players, we will get clarity by April, but the sales for retailers will definitely be good, that we can say. So this is one business that you can study independently. Now, if you have any doubts, you can ask them in the comments. And if you did not like the video earlier, please do so now. And yes, while you are at it, also subscribe to our channel. If you support us by liking this video and subscribing to our channel, we will be able to bring more such videos for you. I will see you in the next video. Happy investing.